I need you to hear this. The United States is in trouble. Our 2025 year-to-date deficit has already hit 1.97 trillion, while our gold reserves are valued at just 1 trillion. That means we are spending nearly double what we actually have in hard assets. And the dollar, it's already down more than 10% this year, on track for its worst year since 1973. Here's the kicker. While traditional finance is collapsing around us, Bitcoin just surged to 114,500 today. That is not a coincidence. This is the story of a failing system and digital assets rising to take the place. You don't want to blink because this is history happening right in front of your eyes. This is real time. What's up, family? It's Coach Massey, and you're locked into the Daily Hodl, your daily dose of Bitcoin and financial news delivered with clarity and perspective. Remember, this is not financial advice, it's for education and entertainment purposes only. Let's dive in. Let's start with the elephant in the room, the deficit. 1.97 trillion in 2025 alone and growing. Compare that with the US gold reserves, which sit at roughly only 1 trillion. That is alarming. Think about it. We are literally spending almost twice what we actually have in hard, tangible assets. That isn't just numbers on a spreadsheet. It affects every corner of the economy. Government borrowing skyrockets, debt servicing costs balloon, and the pressure on the dollar intensifies. Here's a bigger picture though. Historically, when deficits explode this fast, confidence in the currency starts to erode. That's exactly what we are seeing. Inflation remains sticky, interest rates are higher than they were a few years ago, and households feel the squeeze on everything from groceries to rent. And while policymakers debate, the average American is losing purchasing power. That's why we're seeing the dollar down over 10% year to date. It's the worst since 1973. That's a historic collapse. Family, and if history shows that every fiat currency eventually fails if overspent, this is why Bitcoin matters. Bitcoin is not tied to debt, deficits, or central bank printing. It is infinite, immutable, and global. And the dollar erodes, Bitcoin thrives. You need to understand that, and that's why we jumped today. Let's put the dollar's decline into perspective. The last time we saw a year this bad, like I said, was 1973, post Bretton Woods collapse. Back then, confidence in the dollar fell sharply after leaving the gold standard, and global markets had to adjust to a new reality. Now let's fast forward to today. The dollar is down over 10%. The US is spending at record deficits and gold reserves are static. Essentially, our most trusted currency is under siege. And this is where Bitcoin steps in. Unlike fiat, it's immune to inflation in the traditional sense, and its fixed supply means it cannot be devalued through printing. While every other asset tied to the dollar weakens, Bitcoin's independence shines. And that's why you see people like Michael Saylor calling it perfect money. Think about the psychology here. Investors see the dollar collapsing, inflation threatening savings, and government debt growing unchecked. They ask, where do I store my wealth? The answer increasingly is Bitcoin. That's why today's surge past 114,500 is more than just a spike. It's a signal of systemic change. Bitcoin's rise today is not happening in a vacuum. Every macro data point, deficits, dollar weakness, inflation, is pushing forward capital forward to a scarce hard asset like Bitcoin, the hardest money ever created. You see, institutional interest continues to grow. Companies like MicroStrategy keep stacking sats, showing that even corporate treasuries see Bitcoin as a superior store of value. If the dollar is losing credibility and deficits keep exploding, adoption will only accelerate. Remember, Bitcoin is borderless. It's not controlled by any one central bank, and it's fully transparent on chain. Unlike gold, which is physically stored in vaults, Bitcoin moves instantly and securely anywhere in the world. The system of money itself is evolving, and Bitcoin is leading the evolution. So, today's 114,500 price isn't just a number, it's a statement. Investors are waking up, and more people are starting to realize that scarce, decentralized digital assets are outperforming those failed fiat currencies. Let's break this down. High deficits plus declining dollar equals eroding purchasing power. That's a fact. Meanwhile, Bitcoin continues to show resilience, growth, and adoption. So here's your takeaway. If the US keeps overspending, the dollar will weaken further. If the dollar weakens, assets denominated outside the dollar, like Bitcoin, gain relative value. Every surge in Bitcoin price is also a wake up call to institutions and everyday investors that money is moving into a safer, finite asset. It's not just theory. History shows fiat systems collapse over time, and you need to really understand that. I'm a history teacher, so I get it. See, Bitcoin gives people an alternative store of value in the face of all those pressures. As we recap, we know the US deficit is nearly 2 trillion. Gold reserves lag at only 1 trillion. The dollar is free falling and Bitcoin is rocketing. Family, I want to hear from you. Do you think the US deficit and dollar collapse will push Bitcoin even higher? Or are we headed for a short term correction first? Drop your thoughts in the comments. If you found value in this analysis today, smash that like button, share this with anyone who loves Bitcoin news, and make sure you subscribe to this channel so you never miss a Daily Hodl update. Today was a great day. I even spent some Bitcoin off covered calls buying a brand new Tundra. Well, anyways, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.